Everyone. Yeah, that's how I feel. That's how I feel. Yeah. No, so as you all will quickly learn, Wednesdays are my least favorite day of the week, or Wednesday is my least favorite day of the week. Everybody says Monday is the worst, but Monday actually you should be rested from having a weekend of hopefully some relaxation. I mean, you're Truman students, you're going to be working a lot regardless, but at least Mondays will be a little bit of a recuperation. Wednesday, though, it's the furthest point between two weekends. All right. And so that's like all hope has been lost from the weekend before, and hope is still not be found for the weekend upcoming. You're just like right in the middle. I always said that my ideal scenario would be like have the weekend, but also have Wednesday off, and like Monday, Tuesday stop, Thursday, Friday stop. What do you guys think? Does that sound like a good? Okay, well, class dismissed. Unfortunately, they pay me to be here on Wednesdays, so I got to be here on Wednesdays. So, some quick announcements. For those of you who have completed the quiz, thank you very much. For those of you, or quiz, I shouldn't say quiz, the questionnaire. It is in the quiz section, but it's the questionnaire. For those of you who have not yet completed the questionnaire, please do so before Friday. This is a reminder. Also, if you have completed the questionnaire, please do me a small favor. Please make sure that you go into your questionnaire and make sure you've hit submit. I've got this large number of people who have done the questionnaire but have not actually submitted their questionnaire, so I can't actually see the answers yet. So it's listed as you having a questionnaire filled out there, but no actual answers are visible to me yet. Also, to those of you who, I think most of the people saying that they wanted to learn how technology is going to be used in accounting, but for those few of you who answered accounting with killer robots in the last question, thank you for humoring me. I appreciate that. I always get a little bit of a chuckle out of that, out of how me do it. And so, yeah, let's see. Also, one other thing I'm going to be doing, I'm going to hand out this paper. This is basically just a seating chart. You are not restricted to where you fill out the seating chart, but it's been my experience that when students identify a seat, that's usually where they congregate for the rest of the semester. That will be helpful for me because that will allow me to get to know who you are and be able to recognize faces. I already told you last class period, I am terrible with faces and names, and I have to work really, really hard. I envy Dr. Caden. Dr. Caden is one of those people that Dr. Caden's the head of the department, by the way, the head of the business economic department. She basically can meet somebody the first time, and then she basically gets their name down, and she can do that for everybody. And she teases me a lot. We all have our talents, all of our talents. Like her talent is getting to know people, recognizing faces. My talent is apparently the opposite of something the opposite of that. But I do work really hard at trying to memorize names. I'm just not very good at it, but this will go a long way. So if you could just put your name on where you're at, just so you know, the way this is set up is this is the front of the classroom down here. So those of you in the front row will be on the bottom down here. Those of you in the back row will be at the top back here. And that's kind of how I'll read that. So let's start right over here and just pass that around, please. All right. With that, we are going to start our lectures. Like I said, um, the lectures are probably the most tedious part of this, and it's very, very challenging, particularly in this classroom. I used to have a policy where we would change classrooms to lectures, so that way people would not be behind computer screens. I kind of rescinded that policy because I think it was a little bit off-putting for people to have to constantly switch classrooms and have to sit in different spots. So I want you to be comfortable, but I also want you to engage and pay attention. Like I said on Monday, do what you have to do on this. If you have to slam a Red Bull or whatever you crazy kids do nowadays for staying awake, nothing unhealthy, I should say. Is Red Bull considered unhealthy now, by the way? Is that one of those things that your generation has said, we don't do that anymore because that's just really bad for us? There was a thing called 5 Hour Energy, like about like 15, 20 years ago that all of my friends got really into, and they were just kind of like, yeah, 5 Hour Energy is great. It keeps you awake. They found out like it causes paranoia and schizophrenia and stuff crazy and stuff like that. So I think it's still in the market, but there's like all these warnings associated with it. I just don't want to encourage you to be doing bad things that are healthy. I mean, or things that are not healthy for you. Obviously, healthy is good. I say that as somebody who drinks a big cup of coffee every morning, which probably is not great for my nerves, but I got to have that caffeine to stay awake. So yeah, if you need some help staying with it, hopefully my lectures will inspire you. But as exciting as my enthusiasm can be, as infectious as my enthusiasm is, I'm still talking about accounting. So there is that you have to note. Today we're going to talk about accounting information systems and how it relates to firm value. So the good news about this is that some of this is going to be fairly intuitive. And my approach to this is always taking a step back and making sure that we put this from a context that everybody can understand. because you hear accounting information systems, or as well, the shorthand will be for the rest of the semester. You hear me say AIS. You hear a lot of people hear that and they don't really know what it means. In fact, I will argue that people who should know what it means don't know what it means. Basically, it's been a long-standing assumption with respect. Oops, hold on a second. Okay. Yeah. All right, so apparently there's a blue liquid that sell at gas stations supported that helps with focus, but it's addictive. So be careful of that. I think I read something online about that. So yeah, don't always trust everything they say that it's just not it's healthy for you. Okay, but yeah, so be very very careful. All right. So anyway, as I was saying, with respect to accounting information systems, people who should know better really don't. For the longest time, accounting information systems was basically say, all right, here we have all of the accounting classes. Any topics that deal with technology fit within accounting information systems. And basically all the other accounting systems, all the other accounting classes were taught computer free, all technology free. All right. And this is probably 20 years ago. When I took accounting information systems, that was really the only accounting class that I took that had any technology emphasis whatsoever. And we did some ERP systems. We did some database analysis. We did some Excel work. Nowadays, I think other classes that you're going to take will have technology integrated into them. In fact, I know they do because I integrate technology into my audit class. But it's still kind of one of those spurious correlations saying if it's information systems must be technology, let's throw all the technology in there. Like you will not do NetSuite in any of your classes. We're just starting to see AI being used in some of the other classes, but this is like one of the early adopters of AI projects. It's just it's really weird. So what does accounting information system mean? And to some degree, it does correlate with that technology focus, but it goes well beyond that. So let's start out simple. Is everybody good with that? We're going to start out simple. Let's go ahead and start out with the component words. So accounting information system, the very last word, kind of the base word that we're going to be talking about is system. Now, if I ask anybody in this room to define system, do you think you could come up with just kind of a shorthand definition, an informal definition, fairly easy? All right, so it's a lot more complex you might think, and it really depends how do we view a system. So kind of the traditional view of a system, kind of the straightforward view of the system is a regularly interacting or independent component, a group of items forming a unified whole. All right, and you notice I put a picture of gears working into there. That's kind of our traditional view of a system, is like all these pieces working together to accomplish some sort of objective. If we think about a clock is a system. If we think about a machine, like a manufacturing machine, that's a system. If we think about a computer is a little bit more of an advanced system, but it's the same thing. So to the very basic idea of a system, that kind of fills the void. But the problem with this particular definition is if we use system, then we always assume that a system represents something tangible. Can we say that a system is always a tangible object? Probably not. If it was, I probably wouldn't bring this point up. So let's see if we can expand our view, our definition of system. And some of this is going to be a little bit more insightful. Some of this is going to be a little bit more silly, but we're going to have a couple more definitions for how we view system. So the next one, my keyboard's not working, sorry, is an organized or established procedure. All right. So this is the system that's in place. So you talk about how it is that we get through from point A to point B to point C to point Z to the end of the line, and say this is the system that we follow. This is the procedure that we follow. Has anybody heard the term system used in that context, saying, yeah, this is our system? There's a reason that I kind of put this particular slide up there. Has anybody heard of The Facts of Life? It's a TV show. I've been teaching this class for 7 semesters now, and I put it up there. I said, okay, that's something I've before. Nobody has ever heard of this TV show. That shows how old I am, okay? It's a 1980s TV show, which it postdates some TV shows you probably heard of, like Brady Bunch. People heard of the Brady Bunch? Yeah. I used to watch afternoon TV, and this was on right after Brady Bunch, okay? So without going into the details of this TV show, there's one episode that really stuck out to me, and the reason I brought it up here. So one of the main characters is out on a date with a very handsome young man, and he was a very, very, very good looking fellow, but he was not very bright. He was a bit dense, all right? And you could tell because he kept repeating the same phrase over and over again. The phrase was, it's my system. It really works for me, all right? And I don't know why, out of all the episodes of this TV show that I watched, like that one stuck out to me. I could not tell you the names of the characters, but I can remember this particular phrase in this guy. And I thought that was just hilariously funny. But see, what he was trying to say is that he had a procedure for everything he did because he was kind of shortcutting. He was using heuristic to actually make decisions. And one of the examples I remember is he was talking, they were at dinner, and he was saying, what I do is I go to the salad bar and I fill up on salad. Then I take my dinner home with me. It's a go container. It's my system. It really works for me. And he was just really excited about this, trying to share this with everybody else. And good for him for enthusiasm. But that was his procedure. That was his established routine. Okay. So that was kind of an idea of a system that we kind of take it for granted, but that also follows the idea of a system. Now, you probably are familiar with the idea of a system in the other context as well. We got everybody on there? Great. Thanks so much. All right. So let's go ahead and look at a third definition of system, okay? An organized set of doctrines, ideas, or principles usually intended to explain the arrangement of a working or systematic whole. Okay, so everybody heard the system. You can't trust the system, man, all right? Is everybody familiar with Andy Samberg, by the way? Okay, I'm really worried that I'm going to show this, and it's like, who's that guy on the screen? It's Lonely Island, Saturday Night Live. Come on, it's not that long ago. It's like still 15 years ago, but it was still. So there's a song by Lonely Island. It was made a Saturday Night Live skit, and it's called "Threw It on the Ground." And basically, the entire time is that he's trying to rebel against what he thinks people should do. So he's rebelling against the system. And the time at the end of the song, he says, "The moral of the story is you can't trust the system." And that's why the meme is there. That's why there's the picture of that meme. So we think about a system. It's basically what we're supposed to follow, the procedure to follow, and it's very relatable to our previous two definitions. I think this is a good definition that expands upon one of that. So you can say Dr. Barnes' definition of system is apparently a Saturday Night Live skit. Okay, that's the ultimate takeaway that you've got from this. Okay, and it's not even a modern Saturday Night Live skit, not like one of the really good ones like Domingo or whatever the recent ones. Does anybody watch Saturday Night Live anymore? Yeah. I'm gonna feel like really old. It's like, okay, I don't know what Dr. Barnes is talking about. He is really old. I am really old, but I try to be hip. That's what I'm trying to do. I'm trying to relate to you. So yeah, if we think about the system, if we think about the idea of the system itself is one of those things that's very, very critical to understand the definition of our whole AIS, accounting information system. So now that we kind of have a working definition for a system, and this is kind of the idea that we're going to work from, how do we expand this to include accounting information? Well, let's go ahead and add another word to it. We're going to add information system. So what is an information system? This is where we get to a little bit more of a component definition. So an integrated set of components for collecting, storing, and processing data, and for providing information, knowledge, and digital products. Now, you don't really need to pay too much attention to this, to the picture on here. I'm not going to test you on this diagram, by the way. It looks like a very technical diagram, and you probably from other classes have said, well, if it's technical diagram, it's going to be on the exam. This is mostly just kind of an explanatory one. What I really like is the definition here. All right. And it really kind of seems like a blah. Like if you just read this, like, okay, this seems like something I'd read in a textbook and immediately forget. Good. Okay. That's where you should be. You should be learning about important things in life and not the definition, the full definition. Now, if you memorize that wholeheartedly in the past 30 seconds of me talking, that's super impressive, by the way. But what I want to do is I want to break down this definition because I think the easier way to approach this is to look at this definition and break it down into component parts. So let's take the first part. An integrated set of components for collecting, storing, and processing data. What does that sound like to you all? You've probably heard something like this before. If I were to say this sounds like input, does that sound like a reasonable approach to this particular definition as part of the definition? Yeah, this is input, okay? This is input. Then logically speaking, for providing information, knowledge, and digital products, this is going to be, yeah, it's where I was going with this. I was trying to lead you along the line. Yeah, output, okay? So an information system is trying to take input and generate output. And honestly, our definition is not going to expand much beyond that. So if we want to simplify this definition, we say an information system takes data, takes input, and generates information, output. All right, input into output. That's really all there is to it. All right. So now we have information system. So let's go ahead and accounting information system. Let's just simplify this. We're just going to say an integrated set of account components for collecting and processing accounting data and for providing accounting information, knowledge, and digital products. That's just the other definition with accounting in there. That's really lazy, don't you think? That's really lazy. Given this is an entire course, I think I can probably do a little bit better than that. But you know, this was something that I said is a reasonable definition. So in order to get into the idea of what it is that we want to use for a definition of accounting information systems, we need to get a little bit more detailed, a little more thorough. It's obviously an information system related to accounting, but what does accounting mean? Okay. Well, obviously, when we talk about accounting, we're talking about this right here. Okay. We're talking about this. Has anybody heard of this analogy? Accountants are bean counters. This actually used to be more true than not if we go back 50 years ago. So before the advent of computers, before there was large computer use for the, basically that's what accountants did, is they made sure that the numbers balanced. All right. Now, accounting is no longer that simple. Accounting has evolved quite a bit in the past 50 years. Warren Buffett, you has a definition for it. Does anybody know Warren Buffett's definition for accounting? It is the language of business. All right. So those of you who are accounting majors, you're going to specialize in this. Those of you who are not accounting majors, I got news for you. If you hate accounting, first of all, why are you in the course? That's like, but secondly, even if you hate accounting, you're going to have to know accounting because you're going to be using it in your everyday work. Okay. Those of you who are marketing majors, you're going to have to know how the accounting numbers to be able to make good decisions. Those of you who are finance majors, you're going to have to use financial statements to know how to properly invest in finance. Those of you who are management majors, you're going to be managing the details of the numbers from the decision output context. Every single aspect of this is going to be relevant. So you do have to know accounting, even if you're not an accounting major. All right. Which I may have just spoiled things for you. And if you just get up and storm out, I will respect that. Okay. But no, it's not really that daunting. It's just really important to note that accounting information is what is going to be utilized in every aspect of business. So let's go ahead and get more into the detail of the role of the accountant. Okay. So identify and address business opportunities. That's interesting. Because if I were to ask you what is the role of the accountant, that's probably not what you first would have guessed. You probably said, that's generation of financial statements, Dr. Barnes. And I will say that that's on the list, not necessarily by virtue of those exact words. But we don't necessarily think of accountants as the ones who are addressing business opportunities. But they're in a position to be able to do that most effectively because they're the one who are aggregating data. They're the ones who are taking the input, the data, and processing it into output and information. And since they're the one doing it, they've got a hands-on view, or eyes-on view, I guess would be the best word, eyes-on view of what the data, what the data tells us and what we can derive from it. So business opportunities have kind of evolved into the first role of the accountant, is saying what it is that we need to be doing, which makes sense because if you're in a business, you want to be able to make sure that your business can actually generate revenues, that you can actually be successful. It'd be one of those things. What is your business? Oh, I pick toothpicks up and then I drop them on the ground again and pick them up again. All right. I don't know why I thought of that as a business opportunity, but is that something that people need? Probably not. Okay. So we would need an accountant to say, okay, what you're doing has no value relevance whatsoever. All right. Hopefully you don't need an accountant to say that, by the way, but that's one thing that we could do is identify that. All right. Next, decide what information is needed. Now is when we start talking about reporting, which is a big function of the accountant. We think about what the accountants do. They generate those reports. That's actually as a result of these decisions that we need to make. And the reports are used for decision making. So we need to understand what is the information that's going to be provided. Now, if you remember from your 220 class from financial accounting, that's going to be those financial reports. So income statement, balance sheet, statement of cash flows, but it can go well beyond that. Does everybody remember 221 class? You had to generate reports that were not necessarily those three items. Because in a cost accounting setting, the reports can vary substantially, especially depending from business to business. There's no set format. So accounting information can vary dramatically in scope and scale. It's not necessarily limited to reports, but those reports are going to definitely be part of it. We also want to build an information system. So I'm going to break it down to you. For those, some of you this may be good news, some of this may be bad news. But we do not manually create those income statements and financial statements, those balance sheets and statement of cash flows. I know back in financial accounting, you're probably like, I'm really proud. I finally put together my own income statement. You're probably not going to be doing a lot of that in the real world. It's rare that manual happens. It still happens, but it doesn't happen very frequently. Usually we've got systems that do that for us. Now, what does that mean? Well, first of all, it means that you're off the hook from doing that routine over and over again, but that means that you have a bigger responsibility. You have to understand, how do transactions map into the financials? How do transactions map into certain reports? If you generate a sale, where does that need to go? Well, first of all, it needs to go somewhere in the system to post to the ledger, but that ledger needs to flow into the income statement. Because remember, the top of the income statement is those revenues, that line of revenues. So if we're going to develop something that's going to create these reports for us, we need to know, where does a piece of information go when it enters the system? So that's going to be one of our goals for this particular course, is to see, how does a piece of information or piece of data go into the system and come out as information relevant to the users. Also, we need to analyze information that's in AIS. Now, this sounds like something really, really boring and tedious. Like it's too early in the morning for me to do analysis, Dr. Barnes. And I remind you, it's almost not morning anymore. We're almost at noon, okay? So it shouldn't be that early in the morning. Although, if you're like me, you're one of those people who just rather skip mornings altogether and go straight to afternoon. I used to tell people, mornings are great. I just wish they came later in the day, okay? So, okay, yeah. Anyway, so yeah, analyze information in the AIS. Analysis can be very, very challenging, but it's familiar. It's something that you should have already some exposure to. So I'm going to go back to 221 to your managerial accounting class. So everybody remember variances from managerial accounting? I see some looks on the face that don't do that to me, Dr. Barnes. We're not doing variances in this class. No, we're not going to do variances in this class. I won't subject you to that. But if you remember variances, you had to take those formulas, you had to do those calculations. It was like you had to do like the standard cost per unit, the actual cost per unit, and the standard amount per unit, or whatever. It's been a long time since I've done variances. It's been a long time since I taught 221. But you had to do those calculations, and you came up with like a favorable variance or an unfavorable variance. Or you had to write down F or U, okay, which I thought was really funny because I'm a child. I'm basically a giant man child. Anyway, so you had to write down favorable, unfavorable. What was the goal of that? Is it just to show your calculation prowess? Is there going to be a big demand for people who have calculation prowess in the real world out there? Probably not. When you see the word unfavorable, does that have an implication to it? It basically means the business is doing something less effectively than they could, or they did something less effectively than they could. Or if there's favorable, does that mean something? Yes, that means that you did something possibly favorable. Now, that's not always the case. It's possible that you could have a favorable variance and you'd be like, okay, that's a problem. Why do we have a favorable variance here? So an example that we always use back in 221 is basically somebody who had a favorable materials variance but an unfavorable labor variance. What does that mean? I mean, like, well, if they bought the materials at a discount, but the materials are garbage, labor actually had to go up because they were trying to use these materials and the materials are garbage, so they had to throw out half of their work. Is that something you need to be aware of as an accountant? Yes. Do you need to be able to suss that information out from looking at the information system and saying, this is a problem, I need to look at it? Yes. It's not intuitive. This is something that if we would talk to somebody walking down the street next to Truman who's not taken an accounting class, they wouldn't be able to tell you what the big deal is. So, okay, all I just see are the letters FU, and that's kind of what I'm thinking right now. All right. You would as a Truman student to say, okay, I remember this discussion from Dr. Otero's class or Dr. Deere's class, whoever you took managerial accounting with, and you'd say, I remember that these variances were really important, and we have to be able to analyze these. So analysis is a really big part of the job. It's a really big part of any job we talk about with business, because if you don't take care of the details, you're not going to really stay in business for very long. Related to that is provide helpful insights to management, because management has to make the ultimate big picture decisions. But if they don't pay attention to the details, then those big picture decisions are not going to be value relevant. And by the way, something you'll note whenever I do slides is that I hate empty space. So sometimes I'll just toss in a meme that's completely irrelevant. As I like to tell people, I teach through memes. Okay, that's my secret. Is I don't actually teach accounting. I just find the meme that I find funny on the internet and toss up there. So this is one I found. It's like in principles accounting, you're just kind of like really enthusiastic. I said, yes, I want to learn everything. I want to be a Jedi. Okay. And then every other accounting class after you've been exposed to it, you're just like, free me from this pain. All right. So yeah, hopefully I'm on the latter end and not the former end and not, no, the latter end and not, what's the former end, not the latter end. Okay. We'll see what happens. We still got a lot of semester to go. So what is an accounting information system based on these definitions? So it's a system that records, processes, and reports on transactions to provide financial and non-financial information. And this is a three-part definition, and all three parts are important. We're going to talk about why. So financial information is obvious. We just talked about the financial statements, the income statement, balance sheet, statement of cash flows. We could also talk about changes in shareholders' equity, all those things you learned about in those your previous accounting classes. But what about non-financial information? Will we say that those are important too? Well, if you've looked at a 10K, so has anybody looked at a 10K as part of a project, one of the classes? Do you have a good time with that where you're just kind of like, this is so great. I am so happy. No, 100 pages long. It's a miserable experience. And even that's just a snapshot of a company. But what would you say? Would you say most of the information in a 10K is quantitative information or qualitative in nature? It's qualitative. There's a lot of disclosures in there. They're talking about the direction of the company, about what happened over the past year. So the non-financial information may be arguably more important than the financial information. Dr. Otero loves to tell people that one of the things that's really important in accounting that people don't know is being able to articulate information, to be able to write detail. All right. And I think a lot of people who come into accounting say, well, I'm really good at math. If you're one of those people that came into accounting because you're really good at math, I've got bad news for you. It's really important, but it's not the only thing that you're going to be doing. Okay. It's not the only thing you're going to be doing. You're going to get to auditing and I'm going to be kind of like, okay, throw the math books out the window, guys. Okay. So yeah, it's not to say financial information is not important. It's not to say that you can't be successful if you've got math skills in accounting. It's just saying that there is an emphasis on both financial and non-financial detail. Using accounting information to aid decision making. We just talked about that. Okay, decision making really important. We've got to know when to update, when we got to change. All right. If all of our variances are unfavorable, we probably need to make some adjustments to the business model. All right, to make some decisions. And then we're going to talk about one of my favorite things of all time in accounting to talk about, incorporating the appropriate level of internal controls, which the way it's described in this definition is security measures to protect sensitive data for those transactions. How many of you have heard the term internal controls before? All right. If you have, great, then you're already acclimated. If not, get ready. You're going to get sick of it because I'm going to talk about it a lot in this course. And then for those of you who are accounting majors in auditing, we're going to talk about it even more in there. All right. So what do we mean by internal controls? Well, it defines it here. It says security measures to protect sensitive data, which is a good definition, a very basic level definition. I want to give you something else. I'm going to give you kind of a very, very shorthand definition because I think it's important to think about it from this way. So I want you to write this down somewhere, whether you're taking notes on your computer, whether you're writing down notes in front of you. I want you to write down the following sentence. A control is a response to a risk. That's all there is to it. That's all I want you to know. A control is a response to a risk. When we think about controls from a business context, that is basically what a control does. It responds to a risk that is present. Specifically for internal controls in financial in accounting, we're talking about risks that are present in an organization. But you've probably encountered controls in your own everyday life without actually referring to that, okay? Anybody when they were growing up just run around barefoot as a kid, just kind of heedless of the worry, and then at some point you were just kind of like saying, wow, I might hurt my feet if I keep doing this, okay? It's like when I get up in the morning, like Saturday, when I don't have anything to do, and I like to check the mail, and I'm kind of like in my my Saturday attire, which I'm never going to show you guys because it's embarrassing. Okay, but it's usually t-shirt and shorts, and then I got these furry slippers. Okay, but I could walk out and check my mail without my slippers on and my bare feet, and I don't do that because I'm old and I might hurt my feet. So what do? I put on my furry slippers. Okay, to protect my tootsies. That's what I say. I can't believe I just said that. All right, to protect my feet. All right, just ignore that. Just do not clip that out and put that on TikTok. I'm going to be very upset if somebody does that. All right, so to protect my feet. And that's basically a risk that I've identified. My feet might get hurt if I walk around. I'm just imagining now. Oh, I got to stop. All right, all right. Okay. So yeah, and we don't think about that. We don't think about it from a perspective, but we all have that philosophy. Well, the philosophy is basically addressing risk. Now, I may have just ruined footwear for you, okay? Some of you may have been really excited to go out and go shopping for new shoes or something like that. And now you're going to go to the shoe store and you're going to be like, this is a control, all right? And I'm sorry if that's the case, okay? I'm sorry if I've ruined that for you, but it's really important to think about it from that context. We respond to risks and we need to do so effectively. All right. So something that you may be familiar with, this is Statements on Financial Accounting Concepts number 8, the conceptual framework for financial reporting. Has anybody seen this before? You probably will encounter this at some point in your careers. It's not really important that you know the details on this. Some things you may already be familiar with is you may understand the fundamental qualities of financial or accounting information. So the goal of this particular framework, this area, and by the way, you do not need to memorize anything but one thing on this slide, okay? I'll tell you exactly what you need to memorize, but I want to give a little bit of background as to what this is. So this is basically FASB trying to determine what is the nature of accounting information and when should it be provided. And two of the things that they had criteria for accounting information is they said that accounting information needs to be both relevant and representationally faithful. Okay, and these are the two fundamental qualities of information. And it makes sense, okay? Because if you can't rely on accounting information, is it going to be relevant? It's like, okay, Dr. Barnes, can you tell me what's on the exam? And I say, all right, I'm just going to throw you a whole bunch of random information, and there you go. You can't really rely on that if I don't give you specific detail. You can't rely on my representations. And then representationally faithful, that it actually represents what it is that it's trying to measure, okay? So those are two criteria that are really important for accounting information, and that's not going anywhere. But in the AIS level, we have to concern ourselves with what is the type of information we want to provide. And the theoretical answer would be everything. anything information we provide can help with decision making. Like if you were trying to make a decision, would you rather have more information or less? More information, okay? Because the more information you have, the better decision. Now, there exists a point that you're going to say, stop, Dr. Barnes, that's information overload. That's hurting me rather than helping me. And that's not an irrelevant concern, okay? But what is probably the concern about trying to gather information? If you were to gather all the information you need to make a decision, or that information that you could to make the best possible decision, would you be able to feasibly do that? Like trying to say, okay, I want to look at every single college on the planet before I decide where I'm going to go to get my degree. Did anybody do that? Look at every single college on the planet? Why did you not do that? It's because I'm not an insane person, Dr. Barnes. That's a good answer. But more basically speaking, what was your answer to that? The answer is that you don't have those kind of resources. You don't have that kind of time. Okay. There is a cost associated with gathering information. There's a cost associated with that. It could be a financial cost. It could be a time cost. But whatever it is, there's some sort of resource that you have to expend to gather information. So this is actually encompassed by the constraint up here, all right? That the cost of acquiring information should never exceed the benefit provided by that information, okay? So if we acquire accounting information, we want to make sure that the cost that we're going to derive from getting that accounting information is always going to be less than the benefits provided. Now, at a very simple level, we can think about this. Think about going to the grocery store, all right? Let's say we're going to buy bananas. Is there a cost at some point that you would say, I'm not paying that much for bananas? Everybody may have separate thresholds. Some people in this room may say, I hate bananas, Dr. Barnes. They could be given away for free. I still wouldn't buy them, okay? Some people may be like, I would never go without 10 bananas a day, okay? If you're in that camp, you eat 10 bananas a day, watch those potassium levels, okay? But whatever it is, you got your enjoyment of bananas and you've got some sort of cost. And if there's exceeds that cost, you're going to say, look, I may want a banana, but I'm not willing to pay that much for it. The same holds true here. Is that we want information, but sometimes we're not willing to pay excessive amounts for that information. We need to actually determine some threshold at which the cost of providing information is greater than the benefit from that information. So that is a pervasive constraint. That is our pervasive constraint in here. In providing information in accounting information systems, the cost has to be less than the benefit. So I want you to write that particular item down. It says cost up here, but for context, we're saying cost less than benefit. If I had a way to draw it on here, I'd do the little Pac-Man going to the right and I'd say benefit over here, okay? Cost less than benefit. Now, I'm going to make a very quick disclaimer, okay? I will do this at least once, if not a dozen times. I'm going to opt probably on the edge of a dozen times, maybe more than this. I will equate the terms data and information. And we're going to talk about that more a little bit later in the course, but they are not the same thing. When we talked about the nature of inputs, generally speaking, data represent inputs. Information is going to be our outputs. So data is kind of raw, untransformed detail, whereas information represents the transformation of that detail into something that can provide value. Now, don't hold on to that too much, because it's certainly possible that what represents information at one level can represent data at another level. So say, for example, you go ahead and you take some data, you do some analysis, you prepare a graph and you provide all sorts of information and you present that to a class and somebody says, hey, that's really, really cool. Can I see your report? And they take your report and they take the information that you have as data for another report that they develop. Presumably you give them permission to do so. But again, information can be transformed into data for future reference. But for the most part, there's going to be a separation. Data and information are separate items. One generates the input, one generates the output. So information is defined as being data organized in a meaningful way to be useful to the user. Data serves as the input, and like I said, information is the output. Information is not the sole output. It's not going to be relevant of itself because some information has more value than other pieces of information. Generally speaking, when we talk about information, that's things that are going to increase our knowledge about a particular topic or particular concept. And we can use that knowledge to make better decisions. Now, again, I'm not saying anything earth-shattering here. This may be something that you've been exposed to the first time, but I think that you probably knew that at a fundamental level, that's how things worked, okay? When you take information, the whole purpose of that is to actually have some meaningful application for that information. All right, now we know what an information system is, accounting information system is. Let's talk about some very basic roles in accounting information system. So the first role that we're going to have is we're going to have our designer. the person who creates the accounting information system. And some of you may actually be involved in that to some degree. I don't know. There's some people I think we're talking about they're going to be working on computer science degrees along with their accounting degrees. And that's kind of cool because I will say that traditionally speaking, accountants are really bad at coding. Okay. Coming as somebody who actually had to do some coding when I worked in accounting, it was a hard transition. So learning actually how to create the system itself and actually create the flows, there's a big disconnect there because the accountants know where the information should go. The system designers know how to create that information flow. So having that connection would be very, very helpful. Then we have the implementer, the person who's going to create or use the system for productive purposes. You'll notice it says database and administrator. This is a role that we're going to be very familiar with in this course because that's going to be our role when we start working with our ERP system next week. I tried to say next week and I said NetSuite. Okay. That's never happened before. God, it sucks getting old. All right. So next week, we're going to start talking about our ERP system and we're going to be administrators in that system. And the reason for that is so we can actually see the entire system as a whole. What we're going to note is, and I'm going to make this disclaimer a lot as we work through the system, is that in the real world, we would not have that role. We would be in the role of a user, a specific user recording transactions events. So that might be a salesperson, that might be a creditor, that might be a record keeper. Whatever it might be, we have a specific role within the system itself, and that role has defined parameters for what they can do within the system. So somebody who's like a salesperson can't actually check credit data. That might be kind of a point of collapse if you have somebody who's a salesperson who can check credit data because they may say, "Oh, I'm going to prove everybody for credit," and that there's possibly nothing that can go wrong with that. There's a lot that can go wrong with that, but we'll talk about that shortly. Then we have the evaluator, the person who looks at the system to make sure that it processes information correctly. That's the auditor. And as somebody who's a former auditor, I take a lot of pride in that. Okay. Yeah, I've already mentioned it. That's my second class for those of you who are accounting majors. You're going to get really sick of that phrase. For those of you who are accounting majors, I'm going to try to say that a minimum amount of times for this course, but I've already said it like 10 times so far. All right. So those are the people who check the answers. So basically, they look at the system, they look at the output, they try to use the system to generate a similar output. If it's the same, they're happy. Okay. They're just checking the detail to make sure it's consistent. And then we have the managers, the people at the top who kind of organize the strategic plan of the organization. That's the control of the CFO. Those are the ones responsible for the big picture oversight of the EIS. All right. These next 9 slides I'm going to go through really quickly. I want you to make a special note of this. These next 9 slides are fairly intuitive, but they are really important to understand. So please make sure when you're preparing for your homework, and more importantly, when you're preparing for the exam, that you know the sequence within these 9 slides, particularly the sequence on the top row, because it's really important to understand how this sequence flow works, okay? I'm going to tell you 100% chance there will be a question about this on the exam. It's 9 slides, but they're not difficult slides, but that's why I'm going to tell you right now, I'm going to go through them pretty quickly. So we want to talk about the firm value chain in AIS. And from a value chain perspective, basically we're trying to determine how does an organization take input and generate output. And there's many different ways that we can view this, all right? But we're going to talk about the primary activities and then fill in the support activities. So inbound logistics represents the receiving, storing, and distributing materials and in-process inventory. Now it's a simplification where that represents like a tangible process. Think about something like an accounting firm. Does an accounting firm store inventory or process inventory? No, but they still generate value, but usually that's through taking data and processing it to information. So this is kind of a simplification, but it does actually still apply in the process here. So anything that we can actually take as kind of the raw material, the raw product for our business, that's going to be our inbound logistics. Operations transforms inputs into finished goods and services, okay? This is where we take that input and we're starting the process of generating it to output. Then the outbound logistics, that's warehousing, distributing finished goods to customers. Again, this definition implies that it's going to be a tangible product, which is not necessarily the case for every organization. But it's important to note that that transformation process is really, really critical. There's very few businesses that can just take a product, pick it up, and then hand it to a customer and sell it. There does need to be some transformation process. Some of that's really, really subtle, okay? Think about a company like Walmart. Walmart's a retailer. They buy something from large manufacturers and they put it in their stores, and they're going to argue, well, that's no transformation process whatsoever. And I say that's not exactly true. Usually when they buy in very large quantities. They'll buy like 500 items and they'll sell 1 item at a time. That's still a transformation, okay? There's still logistical processes tied to that. Then we have marketing. Marketing and sales, they identify and attract potential customers with the firm's goods and services. So not only do we need to be able to identify or transform goods and services into a finished product, but we need to find a potential market for selling those. There's an actually old story. I used to work for Walmart, very brief time period, but I worked in the Tire and Lube Express division up in Oregon. Okay, which if you ever really want to hear a sad tale, I'm more than happy to tell that story. But not a particularly happy part of my life. Not because of Walmart. Walmart didn't do anything wrong, but for other reasons. But one thing that Walmart was trying to market at the time, they were trying to market air conditioning recharge services. Okay, because people had air conditioning in their cars, and they wanted to actually try to sell the recharge services to make the air conditioners work well. So this was during the summer, and it was working really well in states like Oklahoma and Texas and Arkansas. It was not doing so well in Oregon because in the air, especially the area of Oregon I was in, it never got above 80 degrees year round. Okay. Most cars did not need to use the air conditioning. In fact, the apartment that I was living in didn't even have air conditioning. Okay. Because it never got hot enough for air conditioning. So that was a problem with marketing. They did not market to a really attractive area. So the marketing really, really important, really, really critical in that regard. And then service. This is one of those ones that if you've listened to cost accounting, this is one of those inefficiencies, but it's still an important feature to have because we're all human and we're going to make mistakes. Okay. We're all going to make mistakes. Has anybody ever ordered a pizza and got the wrong pizza, the wrong ingredients on their pizza? All right. What do? You just kind of eat it up, says, well, I really, really hate Hawaiian pizza, but that's what I got in front of me. So cheers. All right. Now, if you put a Hawaiian pizza in front of me, I'm going to throw it out the window, then send it back. Okay. So yeah, I actually really like pineapple. I just don't like ham and pineapple together. So yeah. What you do, you say, I got the wrong pizza. Can you please give me a new one? And it's just to create or to fix a problem that comes up. So that could be like warranty repairs, parts, instruction manuals, anything that we need to actually look at after the fact because of inefficiencies. And that's fine. Inefficiencies are a fundamental nature, a fundamental aspect of everything we're going to be doing. All right, now on the last part, these are support activities. Now I want to make sure that we're clear on something. You will notice that these kind of cleanly fall within the spaces of the primary activities. That does not mean that these are where these go sequentially. Procurement, information technology, human resource management, infrastructure, they actually hit all of the primary activities. Okay. So just because they fall sequentially does not mean that they are sequential items. Okay. Procurement, purchasing inputs, raw materials, supplies, equipment. This could be data, whatever it is we need to operate. Information technology, all technologies used to support value creating activities, both current sales and future R&D. So anything that we can actually do to maintain longevity in the organization. Then we have human resource management, the recruiting, hiring, training, and compensating of employees, because most organizations still, even in the advent of AI, need good employees who can do the job properly. Then finally, firm infrastructure, the key areas of support to the firm, such as CEO, finance, accounting, and legal, basically the people who handle the big picture administration of the organization and make sure that the organization is still providing value. Again, really important to note, these are all relevant to each of the primary activities here. Some may encounter more than others. Like I would argue, procurement is probably most closely associated with inbound logistics, but even marketing and outbound logistics and service can have procurement functions associated with them. All right, let's go ahead and start wrapping up on this discussion. So one thing that you've heard me talk about is you heard me talk about the NetSuite ERP. So what does ERP stand for? It stands for Enterprise Resource Planning. And this is basically an expansion of the accounting information system. It takes a centralized database that collects firm data. Generally speaking, we're going to talk about this from the area or the perspective of 3 business processes. Then these are a little bit later in the semester. I'm going to kind of shorthand vernacular and say the revenue process, the purchasing process, and the inventory management process. We actually have longer, lengthier explanations for those, but those are processes that are present in most organizations. Okay. Now, if you were to say, is that or does that represent all processes in an organization? The answer is not even remotely. Most organizations have business processes that expand well beyond that. Really large organizations could have dozens, if not hundreds, of business process areas. But those 3 business processes represent a big proportion of a lot of operations. So that's going to be our focus. So the AIS usually serves as a foundation for the ERP administration of these particular function areas. So an ERP system can take an order from a customer, fill it, ship it, and create an invoice to bill the customer. Some examples of use might include checking customer credit, checking inventory levels, and determining where the order can be shipped. Now, some of that seems fairly intuitive, but let's take a look at that first one, checking customers' credit. Why is that a fundamental part of an ERP system? Why is that a critical part of an ERP infrastructure? So when you sat down back in 220, when you first took 220, you learned about this thing called accrual-based accounting. Does everybody remember that? Okay, hopefully you do, because that's really important to know moving forward. We don't operate on a cash basis in most organizations. We're operating on an accrual basis. There's separation between revenue recognition and when you actually receive the cash for a particular transaction. In a cash basis system, cash recognition and revenue recognition are simultaneous. But we didn't want to do that now in large organizations because there may be a separation there. So that means that sometimes we extend credit to customers. Is it possible that we could extend credit to a customer? They could buy something and never pay us? God forbid that happens, but yes, it certainly can happen. Okay, it's certainly possible. Okay, so what do we do as an organization try to minimize that possibility? We check customer credit. Okay, this sounds like a risk associated with organizations. So what is this checking customer credit probably called? It's a control. It's an internal control. Very good. All right. Everyone throughout the entire process can view and update the information. That's what we want to see in the ERP is not necessarily everybody can access information, but they can update information as value relevant information comes into detail, which is something, again, we will see as we get more access to NetSuite. All right, last thing I want to talk about is I want to talk about some concepts that you're probably familiar with, but how they relate to the AIS and to the income statement as specifically. So supply chain management refers to the managing the flow of materials, information, payments, and services from suppliers all the way through the customer. As we're going to see when we get to chapter 5, we can aggregate the flow of information through all of our processes in a particular structure that contains everything. That's considered to be our supply chain. That's where we get stuff from the vendors and it goes all the way to the customers. It's kind of the happy circle of life, if you're familiar with the Lion King. All right. Circle of life in the term the accounting information system, which probably would be a much more boring musical, I suppose. But anyway, when we talk about supply chain management, we want to know how does something get from the beginning to the end? What are the steps it goes through? Well, proper AIS design implementation, we can make supply chains more efficient. We can actually determine the levels of inventory and stock and the amount to be ordered and determine the timing to transfer inventory, which is really, really critical because we want to make sure that it's possible that we can create goods on the time frame that we have actually scheduled them to. It's really awkward if you schedule production and you have no raw materials to use in production. So being able to manage the supply chain, really, really important. Let's contrast that to customer relationship management. So CRM, used to manage interactions with customers. So we want to track customer purchases, ensure customer satisfaction, and verify product placement. This is kind of the same idea, but it's on the customer end. We want to make sure that we actually meet the needs of the customers. Has anybody ever gone to that restaurant called Taco Bell? Okay. Yeah. So you're gonna hear me talk a lot about Taco Bell in this course. I don't eat Taco Bell anymore because I can't, because I'm physically incapable of any of that because I'm old. But yeah, I do remember those fond days. Yeah, back when I could order the Mexican pizza. It's really problematic if you go and you order your Mexican pizza or your taco or your burrito or whatever what is your item of choice is at Taco Bell. You pay the people at Taco Bell, and then all of a sudden they say, "Oh yeah, we're out of that." Okay. Probably not going to be very, very happy in that situation if you say, "I really, really looking forward to that taco or that burrito," and then you pay it and they don't give you the item that you paid for. So be able to meet the customer's demands, be able to customer's needs, really, really critical part of any business infrastructure. So how do we actually view this? Well, believe it or not, you should be somewhat familiar with these concepts already, right? You may not have thought about them in these terms, but you've probably seen this, and that's going to be this thing right here. Does everybody remember the income statement? We're not going to do a lot with financial statements, but I do think some accounting knowledge is critical. So at the top of the income statement is that revenues item, okay? Who is usually responsible for generating revenues in an organization? Say our customers usually sell items to customers, okay? So if we want to maximize revenues, do we want to have better customer relation management? Yes, okay? So that's where CRM is going to take place. What about cost of goods sold? That's our vendors right there. We would like to minimize our vendor costs wherever possible. I should say minimize. Obviously, you could say we're never going to buy anything ever. Minimize to a constraint, okay, till we can provide the necessary goods and services. So we want to actually maximize our revenues and minimize our cost of goods sold. That increases our gross margin, which is a combination of both supply chain management and customer resource management. SG&A, that's the organization as a whole. That's the ERP system, making sure that administrative costs are managed properly. And then all of this flows down into net income, making sure that all of the three features we just talked about, supply chain management, customer resource management, ERP, are properly administered so we can actually provide a good net income to the organization. So again, not necessarily an intuitive approach, but it makes a little bit of sense when you think about it. And that's it. We're done for today. I will see you all on Friday for the Excel quiz and for Fun with AI.